Be Wealthy and Smart, episode 1017.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk more about inflation because this is so important to everyone to understand what's going on and what you can do to combat this increase in pricing that we're seeing across the board. First of all, inflation is on a rampage, and this is really a result of all that money that was created a couple of years ago. This is the result of what you see after more money is put into circulation. And as you know, in the last couple of years, more than 40% of the money that exists today was created in the last 18 months. That's an enormous increase in supply. And that's what chips away at our purchasing power. It takes a little while to happen, and there is a bit of a delay, but here we are, and that's exactly what's happening. This has happened before in Venezuela. It's happened before in other countries. This is the same exact pattern of creating more money supply, which eventually creates the shortages and causes massive inflation. And we're seeing all things of value increase dramatically. That's one reason why we're seeing houses gain so much value, is our purchasing power is eroding. It looks like housing prices are going up dramatically, but it really is in comparison to how much purchasing power we're losing with our money. When we go back to 1913, when the Federal Reserve came into existence and was voted and passed by Congress, and them issuing Federal Reserve notes, our money has lost 96% of its purchasing power. That's why when our parents and grandparents bought homes, they were a lot more affordable. It's the erosion of the purchasing power that's making them so expensive. And also limited supply that we're seeing with houses on the market, and definitely increased demand. But what will happen next is a realization that holding physical money in our bank account in particular at such low interest rates is losing purchasing power while inflation keeps dramatically increasing. And at some point, people are going to have the realization that they're going to need to go into physical goods. They're going to prefer to have food sooner rather than have their purchasing power disappear and food prices go up. So they're going to be trading that cash for physical goods like food and cars and gasoline and gold and silver and commodities, even art and collectibles, stocks, crypto, and more real estate. What all of those things have in common is they're physical goods. They're not something that can just be created in more supply and lose their value. And with inflation, their pricing is going to be going up dramatically. So people will rush to buy big ticket items sooner, and they'll rush to stock up on food. And that in turn will cause the prices to go up more as shortages still happen, as food is in short supply with some intermittent shortages happening, and big ticket items have their prices go up, so you decide that you want to buy those sooner. And a lot of this will reverberate into the stock market because those companies that are charging higher prices are going to have bigger profits as well. So they're going to be more profitable, which is also going to make their stock price go up. But people are going to be jumping out of cash balances in their bank and into stocks because that's an easy transition to make. And the stock market, in my research, looks like it's going to be booming in the second and third quarter this year. So as that starts to happen, people are going to jump in again and want to participate in the upward price momentum of stocks. And as we all know, stocks started out with a sharp correction in the first quarter, and the S&P is still down 3.77%. As I record this on Thursday morning, the Dow is down 3.49% year-to-date, and the NASDAQ is down 8.1% year-to-date. However, the bright shining spot are precious metals. And in the first almost 3 months of the year, we have silver up 7.19%. The junior gold miners up 12.62%, the junior silver miners up 13.54%, and the large gold miners up 20.98%. Again, that's a full year's full of returns just in the first 3 months of this year. So already we're seeing money move into precious metals as a hedge against inflation, as something that will gain value in times when even the stock market is having some difficulty. And that's something that I think makes sense to own in your portfolio because of higher inflation ahead and because they all trade in the stock market. As the stock market rises, they're going to have a double boost. They're going to have the boost from being an inflation hedge in precious metals, but also being stocks. So things are really changing, and we haven't really seen this before in the US. Maybe if you go back to the 70s, you could see something sort of similar, but not really like this. So it's really the time that you want to own assets like that in your portfolio that do respond to higher inflation and can outperform the stock market averages. This is not a normal economy. These are special circumstances due to all the money printing that happened. We need to think about strategies that we can implement at home so that as the dollar continues to lose purchasing power, we're making smarter decisions. And that's why you really need to think about preparing to protect yourself and your purchasing power. And I'll continue to give you all the updates and all the information that will help you do that so that we can get through this together. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.